Why do so many traders fail? I mean, the vast majority of them. It's the one question that just hangs over the entire financial world. Well, Mark Douglas's legendary book, Trading in the Zone, has an answer, and it's probably not what you think. It's not about the charts, it's not about the news, it's all in your head. So let's dive into the psychology that really separates the winners from, well, everyone else.
And just to understand how important this is, let's start with a really brutal fact. There's a statistic that gets thrown around that something like a staggering 95% of traders just don't make it. They don't find that consistent success they're looking for. And a lot of them, they lose everything in their first year. So this isn't just a tough business. For most people, it feels impossible. But why? You'd think the winners would just be the smartest people in the room, right? The geniuses with the most complex algorithms. But Douglas makes this fascinating point. Some of the biggest losers are actually doctors, lawyers, engineers, brilliant analysts. So if it's not raw intelligence that makes the difference, what is the secret ingredient? What separates the pros from the rest of us?
Okay, so the first big hurdle, the first trap that almost every single trader falls into is what Mark Douglas calls the analysis trap. And it's this belief, this deeply held belief that if you just learn one more indicator, or read one more book, or find that one perfect strategy, you'll finally crack the code. And this path probably looks familiar. You start out with fundamental analysis, balance sheets, earnings reports, the real value of a company. Then you discover technical analysis, all the cool patterns, trends, and indicators. And you think, okay, now I've got it. But for some reason, you're still not consistently profitable. That's because you've just slammed into the third, and by far the hardest stage, the psychological gap.
And this is the absolute core of the problem. The psychological gap is that incredibly frustrating space between knowing what you're supposed to do and then actually doing it. You ever see a perfect trade setup? You know in your gut you should take it, but you hesitate, you're scared, and then you just watch it take off without you? Yeah, that's the gap.
So why? Why does this gap even exist? Well, the answer is kind of ironic. It's hidden in the very thing that probably attracted all of us to trading in the first place, the promise of total and absolute freedom.
I mean, think about it. In the market, you are the boss. You make all the rules. When to buy, when to sell, how much to risk. It's this huge, open sandbox for limitless creative and financial expression. But, as we're about to see, this total freedom, it's a massive double-edged sword. From the moment we're born, we're raised in a structured world. There are rules, traffic lights, supervisors, things that create predictability and tell us what to do. Then you step into the market, and it's the complete opposite. It's this wild, unstructured place with no safety nets and just constant, relentless uncertainty.
And here's the crazy paradox. We are drawn to the market's freedom from rules, but that same rebellious impulse makes us fight against creating the internal discipline, the self-imposed rules that we absolutely need to survive in that environment. We run towards freedom, but what we actually need is structure.
So how do we build that internal structure? Where do we even start? Well, it begins with the single most important, non-negotiable shift a trader can ever make, taking absolute 100% responsibility for every single one of your results.
Look, it's totally human to have expectations, but we have to get this one thing straight. The market has zero obligation to you. It doesn't care about how hard you studied, it doesn't care about your analysis, and it certainly doesn't care about your hopes and dreams. It's just a neutral force. It owes you absolutely nothing.
And when we don't accept that, we get stuck in this really destructive loop. It starts like this. You take a loss, and you blame the market. It was a fluke move. Now the market feels like your enemy, something you need to beat. So you go looking for more knowledge, not to understand probabilities, but to try and avoid the pain of being wrong. You end up trading from a place of fear, which just causes more mistakes. And boom, this cycle starts all over again.
This quote from Douglas just nails it. It perfectly defines what true accountability is. You can't control what the market's going to do next. Nobody can. But you can control your preparation, your entry, your risk, your exit, and how you react to the outcome. That's where all your power is.
So once you truly accept that responsibility, you can finally start to adopt the mindset that all the professional traders have. You can stop trying so hard to be right all the time, and you can start thinking in probabilities.
This is such a profound shift in thinking. See, amateurs try to force their will on the market. They try to take money from it. But the pros, they just execute their plan with discipline, and they make themselves available to receive whatever the market happens to be offering at that moment. They aren't predicting, they're just participating.
So what even is a trading edge? People talk about it like it's this magical secret.
It's not. It's not a crystal ball. It is simply an identifiable pattern or condition where the odds are just a little bit in your favor, a slightly higher probability of one thing happening over another. That's it. Nothing more, nothing less.
The absolute best analogy for this is a casino. The house has no idea if the next hand of blackjack is going to be a winner or a loser. And you know what? It doesn't care. It completely accepts the randomness of any single hand because it knows its small statistical edge is going to guarantee profits over thousands and thousands of hands. That's how a pro trader thinks. And that brings us to the most important skill of all. The holy grail of trading isn't some secret indicator. It's the ability to genuinely, deeply, and fully accept that you do not know the outcome of your next trade. As soon as you truly accept that risk, fear just...
So, what does this all boil down to? It's really about this. You have to win the game inside yourself before you can ever hope to win the game in the market. And this right here, this is the blueprint. A winning trader accepts the risk completely. They are not afraid of being wrong or losing money because they know it's just the cost of doing business. It's part of the game. They operate purely on probabilities, not certainties. And they know that they, and only they, are responsible for their performance. In the end, what Mark Douglas argues is that the market doesn't create your state of mind. It's a perfect mirror. It just reflects back whatever's already inside of you. So if you're seeing fear and greed and chaos out there, that's not the market's fault. Which leads to the ultimate question: what does that mirror show you?